Testing, testing, 1, 2. Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. We're glad you're able to join us today. Take a little bit of time out of your busy schedule and take a look at some markets and some portfolios and some very interesting things to get involved with, particularly if you want to devote some risk capital that you might have, seeking some higher returns. So we'll get right to it. The first thing we're going to do is take a look at the E-mini S&P 500 futures contract, front month in nature. This is the ES, and look at the last print of 1668.50. And as you can see from our official market timing, we did in fact have a 200-point gain on the futures contract. And of course, this is our free official market timing bias that we send you out in the videos. Anytime there's a big move in the market that we're anticipating, for instance, last July 2012, around this time, about 53 weeks ago, we went to officially bullish at 1338.50 on the S&Ps, as you can see right around here. Right around there, and of course we held that. We had this huge sell-off. It was very taxing. Nevertheless, we really weren't negative that much on the position, the market timing, and of course we held through there, and lo and behold went on to blast to new highs, and of course that was at 1540. And as you can see, that's when we locked in our gains. We figured, well, 200 points, $10,000 per contract, margin of $4,000 to $5,000 on the E-mini S&P 500 futures contract. So you put up 5,000, you get that back 15,000 if you're taking our signals on our official market timing, which, as you know, over the last almost 10 years, the market timing is a valuable tool, particularly considering that it's free to you folks to enjoy, and we offer that as a free service, just as a compliment. And as you can see, however, the trade was exited a little bit early. Now, having said that, you can see this was against our discipline. We really didn't have any reason other than a couple of divergences and new highs, and we anticipated the market was a little overbought at that time, so we didn't go to bearish, but we did want to go ahead and lock in our gains again. 200% return from July to 9 months. Not a bad way to book some profits and then see where the market's going to go. We definitely would have likely gone back to bullish had we seen a move to retest around 1450 to 1500. We didn't get that. We got to move back to just to where we exited essentially, and then the market just blasted off this spring. It was just a huge blast, almost to 1700. So it's quite nice. And of course, all you guys, what we're talking about here, this is risk capital. This is 10 to 20% of your portfolio. We all have our IRAs. We all have our long stock positions. We all have, of course, we've had the lost decade over the last 10 years or so, but over time we do have our long stock positions and have profited nicely. But here in this context, we did want to just hold off, wait and see what the market was going to do. We're definitely looking at going bearish now. We've been neutral. We want to see what the market's going to do. Having said that, we are definitely overbought, and particularly going to go into the fall season. We definitely want to be positioning ourselves toward the short side of the market. Now, we're not there yet. We would be issuing the bear signal. We thought about it today around 1675. Of course, the highs were around 1679. As you can see right here, back in May, 1679.75 was the highs, and we're just retesting those highs. And essentially, we've gone from 1550 over 100 points in a very short amount of time. So we definitely considered a bearish position, but officially we're not going to do it. Unofficially, definitely be selling this zone. You can have a tight stop. We're just retesting the highs. The market's extended. We've got some sentiment indications that suggest a little bit of overbought and a swoon might be in the cards. So you definitely want to be selling 1670. That's going to be kind of an unofficial swing trade that we're offering to you. 1670. You're going to stop probably around 1690. If we get to 1690, we're probably going to go to 1700. 1700, 1710 at least, and then see where 1700 is going to take us. But if we're at 1700, we're actually above the recent highs of 1680 aforementioned, so it's a little murky, it's a little ambiguous. So we're just going to hold right now. Of course, as you can see, short-term bullish from a momentum perspective, intermediate-term bullish is the case. From a directional perspective, both are bullish, as you can see there, and from a trend following perspective. So we are about 8 out of 9 the price technicals are bullish, save the recent high, but we're almost overwhelmingly bullish. Again, that's why we really can't, in good faith, issue an official bearish stance. Unofficially, definitely a good trade to short the S&Ps here at 1670 to 75, and definitely look for a move back towards 1620 before we make a run at 1700. That's what we anticipate. Taking a look at the intraday, we had a beautiful short setup today in the MA disc. That was very nice. That portfolio got retooled. It struggled during the spring, so it got retooled. We had a beautiful short setup, and again, as you can see, looking at the intraday dynamics, you can see bearish, definitely negative divergence. We had essentially a new high prior to the relative to the prior day, so definitely a negative divergence, another negative divergence here, actually arguably bearish here. So we have 1, 2, 3, 4, 5, 6, 6 out of 7, 6 out of 6 overwhelmingly bearish indications here. So you definitely, again, want to be positioning yourself as we did on the short side. Definitely we added to our short exposure that we had been holding on to at 1675. We'll look at that in a second, but nevertheless, you can see some good trade setups on the bearish side in terms of the intraday. Now, having said that, here's our free model. Hasn't really done much, but it is free. And if we can take a quick look at the sentiment perspective, we are definitely getting a little bit of complacency here, but with the market, this is the mini Russell, the market blasting this move is absolutely incredible, almost straight up. It's trend followers are having a utopia moment, as you can see this blast off top, and that is very well what it could be, but we're not really going to, that's just conjecture. We're going to let the market and the price technicals determine where we are. Again, that's why we didn't go to bearish on such an extended move. Now, having said that, with a 0.81, not really too much complacency considering relative to the market at new highs, but based on what we've seen relative to recent terms, there's been a little bit of complacency. In fact, as you can see right here, the last time we got there, 2 times ago we got there, we had a beautiful sell-off. The next time we didn't get any sell-off at all. This is the 3rd time. Probably going to get some retracement for sure, as the Russell has gone from a low of 938 to 1038 essentially. So a nice 100 points in the Russell. So definitely look for a retracement back to 1,000 in this. What was beautiful, though, was this outside day. First, we had the bearish, ergo bullish, opposite sentiment, reversal in the VIX, and then we had the beautiful new high with the bearish, ergo bullish, reversal in the VIX right there on this beautiful bottom. What a beautiful trade that was. As you see, the market just blasted off. That was essentially calling the bottom. That setup is usually good for calling bottoms. You can see a hybrid. There's an ET sell, ergo buy signal in the VIX, and you can see the market just raced up there. Having said that, this is our free system, and as you can see, it's not too bad. What we wanted to do with this video is a few of our portfolios, MSA UDT, Valerius, MA Disc. MA Disc has been retooled. That's a great time to get involved with that. MSA UDT's had several months where it's just kind of been flatlining. Definitely a time to get involved with MSA UDT. Valerius, same thing. We're going to look at some new portfolios. We have some dual day traders, dual day trader 4.0, dual day trader 5.0, and triple threat trader 6.0. All 3 you can trade with $10,000. The first 2 you can trade with just $5,000 in risk capital. We'll take a look at those in a second. But we're going to go ahead and scroll through some of our trading models. So there's a great time again to get involved with this free model, the VIX EPCR. and you can see here's our EV3 ACTSR. Kind of waning a little bit. Boop, boop. Kind of waning. EVR3 filtered. New highs. Again, a pullback right here. We've had some pullbacks. It's just been kind of a when you have a market that's literally being essentially manipulated, kind of the way oil used to be, gold used to be. Now maybe it's going to be stocks that are just going to go straight up forever, and you're going to think that's awesome, and we're all going to think that's awesome. But those markets aren't particularly tradable for traders or trend followers about 30% of the time. And of course, the way down is going to be, look at the old oil and gold. The way down is going to be the same exact way going up. So that should be great. EMDS right here, beautiful new high in the EMDS. Absolutely love this trading model. As you can see, green dot, R60F. Now this portfolio, this system is actually part of one of the 3 new portfolios, the triple threat trader, the dual day traders, one of those I cannot remember, day trader 8.0 EV. Beautiful equity card. Of course, you're talking about 10 years on these models, going back 10 years. These are 10 years going back to 03, as you can see. So you definitely want to green dot right there, EVR3 VSR. This is another one of the so these are these models right here, 1 2 3 1 2 3. This is the triple threat trader right here, and a combination of these 2 3 are the dual day traders. So you can see some over time the last 10 years, and we'll take a look at some reports. MSRM PTL, and of course all these factor in slippage of 1 tick entry and 1 tick exit, and of course commissions as well. MSRM PTL coming off a little bit of a green dot, but as you can see, participating nicely. Excuse me, R30C, green dot, R30B, green dot, just some beautiful, just new equity highs, essentially. That's how you can read the green dots. EVMCM, this is actually another part of one of the new dual day traders, EVMCM or the triple threat trader. Not really, can't really remember which, but there you see the EVM again at a new high. CBR, let's see, kind of flatlining over the last several months. ISRD, retracing a little bit. Again, beautiful time to get involved. Anytime you see a green dot methodology with a retracement, that's when you want to get involved. Here's where you want to get involved. Here's where you want to get involved. Anywhere, actually anywhere you want to get involved, but particularly, you know, if you're getting involved here, you're likely not getting involved here, where you'll have to withstand that drawdown. EVR3 coming down just a little bit, but just off a green dot again. This is where you want to get involved. This is where you want to get involved, right here, right here, 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 here. You definitely, when you have a retracement, just like here, you want to get involved. ESM30, beautiful green dot. Here's where you want to get involved. Here's where you want to get involved, or just about anywhere, but definitely when you get these moves. R2K Day Trader 60, coming just off its green dot. So, and Swing System 5.0. This is here. This isn't actually any a part of our portfolios any longer, but just kind of makes an interesting note. This was the huge sell-off in 2008. This was about a 6-month period, and this can happen. You know, this can happen, but you don't want to throw the baby out with the bathwater, because as you can see, if you extract this, and we of course never want to do this, because this is taken out a part of the system, and you just can't do that. But to exemplify, you could take this equity curve, stick it here, and if you do extract that, you can see that overall, the other 90% of the time, this model, which actually isn't part of our portfolios any longer, would be at new highs. Look at this. Straight trend up, so save the financial crisis of 2008. Just wanted to give it a little example of that. You have a pretty good trading model, and maybe, you know, if it continues to act well, it'll get reinvented or put back in. So we have right here the Valerius MSA UDT, the new Dual Day Trader 4.0, 5.0, Triple Threat Trader 6.0, and of course the MA Disc. So if we take a look at Valerius, you can see how the portfolio is done. Here's the equity curve right here. This is a nice move lower. You definitely want to get involved. Look at here. You definitely, some people might think, oh no, it's good. This is where you want to get involved. Boom. This is where you want to get involved. Boom. We're more than likely going to be talking next month or in the next couple of months about the new highs in Valerius. And look at this. You can get a quarter specially for just $688, $300 a month. You can get involved with Valerius with full automation. 32% annualized return. Maximum drawdown has been just 20%. Started with $50,000. We're at $90,000 in system equity after the slippage and commissions. $90,000 right there. So $40,000. It's quite a bit of pretty impressive game. Almost 100% in the last couple of years since late 2011. So about January 2012. So about a year and a half, almost 100% against maximum drawdown, very important, 20.34%. And there you see, right there, you can read MSAUDT. Similar thing, double the performance on an annualized basis, 68.3%. These are third-party tracking. 68.3% annualized return. 31.1% has just been the maximum drawdown. 68.3%, there you see, 31% was the maximum drawdown MSAUDT. This portfolio trades 6 day trade only, so no overnight risk, and $10,000 will get you in the door. The margin on this portfolio is obviously about $500, so a contract, so $3,000 is the margin. You have $7,000 in cushion, and of course the drawdown has been only 31.1%. And again, another great opportunity. This is where you want to get involved. Boom. This is where you want to get involved. Boom. Right here. Boom. You definitely want to take advantage. A lot of people like to get involved here. Wow, this is really great. It's just going to continue in euphoria, and that's not really usually the case, although it can happen, to be sure. If we look at Valerius, you want to get involved here. I mean, you are going to continue higher, but it's going to wane a little bit. I mean, markets are not always the same, and that's why it takes a long time to learn how to trade them. And there you have. So this is we just definitely wanted to do a video to mention that these are some great opportunities to get involved with these portfolios on these drawdowns. You can trade MSAUDT for $488 for 3 months. It's absolutely insane. Definitely a fantastic value. Trade 6 elite trading models. You can trade it for just $244 a month if you like. If you just want to do start off with a month, and of course you can upgrade later to a quarterly special. Dual Day Trader 4.0. You see right here, this is a $5,000 portfolio. 230% annualized return. These aren't these are the models that we just showed you in TradeStation that we've had for quite some time, where we're going to be offering them with full automation to the clients of the MiniAnalyst.com, and 230% annualized return against maximum drawdown of 77.6%. If you're interested in a little less risk, that's of course on $5,000 figure. You can look at this chart. This is actually based on a $10,000 component, and you see everything's the same. The return, the net profit, just the percentages are halved. So the drawdown would be half. Or I'm sorry, the drawdown on a $10,000 model would be a more moderate version. $10,000 moderate version would be just 38.8% of your total equity going back. So there's Day Trader 5.0. Here you go, 320% annualized return, maximum drawdown of just 34.8%. Yeah, not bad. That's $200. That's why the Dual Day Trader 4.0 is $150. Day Trader 5.0, if you want that performance, obviously a little better than the 4.0, you're going to pay for it. $200 a month. Triple Threat Trader 6.0, you can take a look at these. 3 models that we just looked at. $251,000 over the last decade. And of course, these are all over 10 years. As you can see, this one trades 4 contracts, 3 systems. This one trades 3 contracts, 2 systems, and this one trades 2 contracts for 2 systems. And then, of course, we have the MA disc, which we mentioned. Struggled. It was off to a great start, and then it just struggled, particularly with relative to the number of trades. There were just too many trades occurring, so it went from $10,000 almost up to $20,000, and back to 10. Got retooled, and we've since gone back to, I think the total system equity now is 18,000, so we're looking at about 13,000 or so. Again, we had the trade today in MA disc that we mentioned earlier in the video. So you can trade that for just $188 a month. So what you guys do is, let's say you want to do MSAUDT, and you go ahead and add the cart. Got a little special for you. That's just going to be $244 a month. If you want the quarterly, you can do the quarterly. Just click that link. But we can go back to our cart, and what you can do is enter promo code VIDEO. Don't tell anyone. Don't tell anyone. Video, VIDEO, and these are already amazing prices for these portfolios. I'm here to tell you, particularly given the value. Go ahead and apply that. Boom. You're going to save another 20% by entering that promo code. 20%. You can trade MSAUDT for $195 for a month. If you want to trade the Dual Day Trader 5.0, add it to your cart. You're going to save another 20% off the Dual Day Trader. $160. If you don't want that one, if you want the Dual Day Trader 4.0, add that to the cart. Take that out. Another 20%, $120 a month for the Dual Day Trader 4.0. There you go. So I think we've covered everything. If you guys have any, I did want to show, I guess, one more thing. We'll take a look at this. These are the portfolio reports of the aforementioned portfolios, as you can see on the website. One was $116,000 in profit, trades 2 contracts. That's the Dual Day Trader 4.0. Here's the Dual Day Trader 5.0, trades 3 contracts. Here's the Triple Threat Trader, trades 4 contracts, 251%, 37% max drawdown, 17% max drawdown for the 5.0 Dual Day Trader, DDT, DDT 4.0, 38%. But let's take a look at the returns. We'll look at the monthly returns. So last month, this is of course after slippage and commissions. Last month, the DDT 4.0, $2,000, lost $800, $2,300 the month prior. Few bad losing months. You can see right there. Blah, 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 blah. Well, let's look at the equity graphs. So the DDT 4.0 has been kind of flatlining a little bit. It's picking up. It's at new highs. Let's take a look at the equity graph of the 5.0 at new highs. Let's take a look at the equity graph of the Triple Threat Trader at new highs. But take a look at this. These monthly returns. Look at the Triple Threat. $7,000 last month. $7,000. Lost $4,000 the month before, but $2,600 the month before. Last December, $10,000 in the holiday season last year. Of course, that's after losing about $7,000. Yeah, about $7,000 there. But you'd made $5,000. You get the idea. So you can go to the website. Oh, actually, you can't see these. That's what I wanted to definitely show you. Look at these. Look at this gain. $17,000 in July and October, September. Hello, of the fall. Let's just say the late summer and fall of. That was pretty nice for the Triple Threat Trader. You definitely want to be there, involved, and taking advantage of when those moves happen. Monthly returns on the Dual Day Trader 5.0. Definitely recommend this one over the 4.0. But you made $4,000 last month, so it's been pretty nice. It's been pretty nice. And so, again, go to the website. You can actually also go ahead and minimize that. Chat with support team live. You just hit that link, and you'll be able to type in any questions that you have. You'll be able to chat with the support team live. Again, any questions, if you have any questions at all, you can shoot us an email, admin@MiniAnalyst.com, and so that's a great 2 ways to ask any questions that you might have. Again, it's full automation. All you do is have a brokerage account with one of our compatible 10 brokers or so. I'm sure you probably already have one with those. It takes just $10,000 to get started in risk capital, and we'd love to have you aboard. So if you guys, again, have any questions, please feel free to contact us. And we hope you've enjoyed the video, and we'll see you next time.